So what is Forex? Forex basically stands for foreign exchange and is simply exchanging one currency for another. If you've ever traveled to another country, you usually had to look for some sort of an exchange booth to exchange the money you have in your wallet into the currency of the country you're visiting. For example, I recently traveled to Bali and I had to exchange my £5 into 100,000 Indonesian rupiah. Okay, so this is what trading is. You're exchanging one currency for another. That's all it is. The foreign exchange market, which is also known as Forex or FX, is the largest financial market in the world. The largest stock market in the world, which is the New York Stock Exchange, has a trading volume of 22.4 billion a day. And in the Forex market, the trading volume each day is 5 trillion. So yeah, you can see how Forex is the largest financial market in the world. Now you know what Forex is, and now you might be wondering, what is traded in Forex? Is it crypto, oil and gas, gold? What exactly are we trading? And the answer to that is we are buying and selling currencies. So you're trading currencies and nothing else. So you're basically buying and selling currencies only. You have to know when trading Forex, you can't buy or sell with just one currency. For example, you can't just buy pound by itself. You would have to trade with another currency. For example, pound USD, okay? And that's called a currency pair. When you're trading in Forex, you can't just buy or sell one currency. So you can't just be like, I'm going to sell USD. No, you can't. You would have to pair it with another currency and you would trade with what we call a currency.
Harold Wall Street, Willie. What is the New York Stock Exchange? The New York Stock Exchange, or NYSE, is the largest stock exchange in the world and was created in 1792. It is an iconic building located on Wall Street in the financial district of New York City and is owned and operated by the Intercontinental Exchange. What are some popular companies listed on the NYSE? The total market value of all the companies listed on the NYSE is in the tens of trillions of dollars. Some of the oldest publicly traded U.S. companies, like IBM, Coca-Cola, Procter & Gamble, and Pfizer, are listed on the NYSE. Some other popular stocks include Apple, Amazon, FedEx, Netflix, Citigroup, and Walmart. How does trading happen on the New York Stock Exchange? The New York Stock Exchange, also referred to as the Big Board, was famous for using the open outcry system on its trading floor, which is composed of 21 trading rooms. The open outcry system is where traders, who represent the buyers and sellers, shout stock prices at each other and make hand signals in order to complete the trades. The NYSE processes billions of shares every single day, and although most of the trading nowadays happens electronically, the open outcry system is still used for a few extremely high-priced stocks and high-volume institutional trades. What else is special about the NYSE? The NYSE's opening bell at 9:30 a.m. and closing bell at 4 p.m. mark the start and end of a trading day. What started as a tradition has now become a very prestigious event, and important people, like CEOs of businesses and celebrities, are invited to ring this bell. What are some other popular stock exchanges? Some other popular stock exchanges include the Nasdaq, London Stock Exchange, and Shanghai Stock Exchange. We'll cover them in other videos. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend! If you enjoyed this video, check out related videos and playlists in the description box below.
You have to know when trading Forex, you can't buy or sell with just one currency. For example, you can't just buy a pound by itself. You would have to trade with another currency. For example, pound USD, okay? And that's called a currency pair. When you're trading in Forex, you can't just buy or sell one currency. So you can't just be like, I'm going to sell USD. No, you can't. You would have to pair it with another currency and you would trade with what we call a currency pair. Now, what is a currency pair? A currency pair is the quotation of two different currencies with the value of one currency being quoted against the other. The first listed currency of a currency pair is called the base currency, and the second currency Base currency would be pound, the quote currency would be JPY, Japanese yen. Unlike the New York Stock Exchange or the London Stock Exchange, the Forex market has neither a physical location nor a central exchange. The entire Forex market is run electronically within a network of banks continuously over a 24-hour period. Trades can take place anywhere as long as you have an internet connection. When can you take trades? Well, the market is open 5 days a week, 24 hours a day. So Monday to Friday it's open and Saturday to Sunday it's closed. Now let's talk about the 7 most actively traded currencies. Number 1, we have the US dollar, USD. Number 2, we have euro. Number 3, we have Japanese yen, JPY. Number 4, we have pound sterling. Number 5, we have the Australian dollar, AUD. Number 6, we have the Canadian dollar, CAD. Number 7, we have Swiss franc, CHF. Now, as you can see, the dollar is king in the Forex market. And that's because the dollar is the most traded currency, taking up about 84.9% of all transactions. Now, why is the dollar so powerful? Well, number 1, the United States economy is the largest economy in the world. Number 2, the US dollar is the reserve currency of the world. Number 3, the United States has the largest and most liquid financial markets in the world. Number 4, the United States has a stable political system. Now, moving on, how do you make money trading Forex? The objective of trading is to exchange one currency for another in the expectation that the price will change. An exchange rate is simply the ratio of one currency valued against another currency. Now, how do you read a Forex quote? Currencies are always quoted in pairs such as pound USD or USD JPY. The reason they are quoted in pairs is because in every foreign exchange transaction, you are simultaneously buying one currency and selling another. Here's an example of a foreign exchange rate for the British pound versus the US dollar. The first listed currency to the left of the slash is known as the base currency, in this example the British pound, whilst the second one on the right is called the quote currency, in this example the US dollar. When buying, the exchange rate tells you how much you have to pay in units of the quote currency to buy 1 unit of the base currency. So in the example above, you have to pay 1.51258 US dollars to buy 1 British pound. When selling, the exchange rate tells you how many units of the quote currency you get for selling 1 unit of the base currency. In the example above, you will receive 1.51258 US dollars when you sell 1 British pound. Okay, so we have Euro USD here, and let's say you wish to take a buy on Euro USD. Well, simply what that means is that you are buying the base currency while simultaneously selling the quote currency. So in simpler words, you're buying Euro whilst also selling the dollar. You would buy the pair if you believe the base currency will appreciate, gain value relative to the quote currency, or you would sell the pair if you think the base currency will depreciate or lose value relative to the quote currency. So in simpler terms, let's say you wish to place a buy for Euro USD. Well, you're hoping Euro strengthens and the dollar weakens, so you're hoping Euro goes up and USD goes down. And if you're selling, you're hoping Euro goes down and USD goes up. Base currency will appreciate, gain value relative to the quote currency, or you would sell the pair if you think the base currency will depreciate or lose value relative to the quote currency. So in simpler terms, let's say you wish to place a buy for Euro USD. Well, you're hoping Euro strengthens and the dollar weakens. So you're hoping Euro goes up and USD goes down. And if you're selling, you're hoping Euro goes down and USD goes up. Now let's talk about the definition of long, short, bullish and bearish. You will always hear traders saying they are going long or going short, and simply what that is this. When you buy, you are going long, and when you sell, you are going short. So long equals buy and short equals sell. Now what exactly is bullish and bearish? Bullish basically means that you believe a currency pair will go up. So you believe it's bullish, it's on a bull run, it's going to go up. Bearish, on the other hand, means that you believe that the currency pair will go down, meaning you will sell. So bullish means up, bearish means down. Now let's move on to the bid, ask and spread. All Forex quotes are quoted with two prices, the bid and ask. In general, the bid is lower than the ask price. The bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency. This means the bid is the best available price at which you, the trader, will sell to the market. If you want to sell something, the broker will buy it from you at the bid price. The ask is the price at which your broker will sell the base currency in exchange for the quote currency. This means the ask price is the best available price at which you will buy from the market. If you want to buy something, the broker will sell or offer it to you at the ask price. The difference between the bid and ask price is known as the spread. On the Euro USD quote above, the bid price is 1.34568 and the ask price is 1.34588. If you want to sell euro, you click sell and you'll sell euros at 1.34568. If you want to buy euro, you will click buy and you'll buy euros at 1.34588. So as you can see, the difference between the bid and the ask is only 2 pips, because the bid is at 1.34568 and the ask is at 1.34588. So 58 minus 56 is 2 pips. So 2 pip spread. That's how you calculate